Welcome to Ivanoff Retirement Insights with Paul and Travis Ivanoff. The father and son team at Ivanoff Advisors and Ivanoff Wealth Management helps clients grow and protect their wealth. Paul and Travis understand the importance of having tax-advantaged, reliable income in retirement, protecting your assets, and helping you achieve your retirement dreams. Now, Ivanoff Retirement Insights.
Yes, and if you are ready to get some clarity on your retirement situation, you are in the right spot. We've got Travis Ivanoff and Paul Ivanoff here to help clear up a lot of the noise we deal with. Travis, how you doing today?
I'm doing good.
Paul, how are you doing today?
I'm doing great, Allie.
Well, and I'm curious, how often do people come into your office because they just want you to level with them about what in the world all the headlines flying their way mean? I mean, there's just been so much lately.
Well, lately we've heard a lot about tariffs, and we're hearing all the naysayers. The world's coming to an end. It's going to ruin the country. But I've always felt it's just a negotiating tactic, and it appears to be working. A lot of countries and businesses have come to the table, and it's just to get things in order and put America first.
Well, and Paul, I'm glad you brought that up because this is a topic I wanted to drill down on. We're seeing a lot of headlines, a lot of changes that Trump is bringing to the table. Tariffs really has been in the spotlight, and even Trump himself has cautioned that the threat of tariffs could cause some pain with this trade war. So given that, I do want you to take a listen to strategist Jay Woods on CNBC.
We need to buckle up. Those watching your portfolio minute to minute, you may want to step away for a little while. The volatility is going to ensue because the headlines keep coming at us. And so we're going to see intraday volatility, day-to-day volatility, so we need to buckle up.
Okay, so he has a strong opinion there, and it can be a little bit scary for someone looking down the road at retirement. When you guys hear buckle up, it may be a rough ride. How do you react to that? And does it mean you might lean into a defensive strategy with your clients? What's your opinion on this?
Yeah, so I agree that stepping away from looking every day, because I have clients that do that and they look at their portfolio every single day, but we do make small changes or sometimes large changes in our portfolios. And one of the things we have done in lieu of the tariffs is we have shifted some of our exposure in our global and international market right now. So we are going more domestic and small cap, mid cap on the domestic side of the market. So I do think, though, something to be noted that I try to talk to my clients about daily when I'm on the phone with them or during a review or whatever it is. You know, we are in a stock market, and it's going to go up, down, sideways every single day. And you have to make sure that your risk score matches with your portfolio. And we do a good job of that in-house when we do our risk questionnaire. So we understand the risk of the portfolios that we're utilizing. And though we are making changes, maybe, out of international, et cetera, as long as it matches your risk score, we can go up and down in the market, but you have to have a 5-year set of goggles on is kind of what we talk to our clients about. We need to look at this over the long haul, because we are not day trading, like he said, because the market intraday and end of day could go up, down, or sideways. But as long as we are defensive with our strategies, or even if we have a lot of strategies with potential aggressive growth, well, yeah, there can be aggressive losses, but it needs to be part of your overall plan on your strategy allocation. So we need to understand that going in, and understand that we are talking to our chief investment officers bi-weekly, and we're having quarterly meetings as well. And based off the trends of the market and outlook, we are making changes. But if you can't handle any risk at all, then the market's not where you want to be regardless, because there's always going to be something new that is unpredictable, like happened in 2022, 2008, 2001, 2015. We can't predict it, right? And no one has a glass ball that works. Mine broke a while ago. So the goal is just to be positioned correctly as far as your risk tolerance, allow us to make changes where we see fit, and move at times to more defensive strategy. Maybe that's a tilt into short duration bonds or mid duration bonds. It just really depends on that individual situation, and making sure we get it right out of the gate and understand their risk tolerance.
Well, and because it is so custom, I'm curious, Travis, how do you figure out what goes into figuring out someone's risk score?
Yeah, so we have an 11 question little document there that kind of gives us an idea, like how much would you be comfortable losing before you made a change? If you lost 20% in your portfolio, would you ride it out? Would you sell immediately? And most people are going to sell immediately. But we work with retirees and people getting ready to retire, so that's an easy question for us to answer. Or there's another one on there that talks about what scenario are you most comfortable with? If you had $250,000 over a 5-year period, would you be most comfortable growing that portfolio from 250 to 270? And that's worst case. And then best case, growing that scenario from 250 to 300,000. And if you answer yes, that is your number one priority, that means you do not want any losses in your portfolio, which means maybe the market's not the best place to do that because you can go up, down, or sideways daily. So we do questionnaires, and then, the questionnaire is one part of this, but really just getting to know the clients, like, hey, how did you respond in 2022? How did you respond in, the market lost a little bit in 2018? And getting to know them. So even if their risk tolerance seems to be high, we might even redo it because what they're saying they would do versus what their risk scores are don't match up. So it's something we take, very seriously in our firm because we need to understand that some clients can't lose any money, right? They're very reliant on that for their portfolio. And of course, our goal is not to lose money, but it's just part of it.
Yeah, and also, Allie, when we do this, it's usually on the first appointment with the client, and we have husbands and wives both participate. So when we run through these questions, we want them to get an idea as to what they can be in agreement with, and and that way we can definitely figure out their risk tolerance. And for some people, if they don't want to risk anything, just maybe the market is not for them, and we have other alternatives that we could show them.
And I'd add on to that, sometimes I do them separately. If the wife is very conservative and the husband isn't, well, let's do separate risk tolerance, and then we'll manage your individual portfolio separately as far as risk goes, because you don't have to match, right? I don't have to agree with my wife if she's more conservative, but my portfolio might be skewed moderate or aggressive, where on her portfolio, let's make sure she's comfortable with a conservative approach.
That's an interesting tactic. I like that. So when people do come in for maybe a second opinion on the portfolio they currently have, and they tell you, look, I don't want to take a lot of risk, that's why my portfolio is so conservative, but then you guys take a look with your financial advisor lens and you see they don't realize how much exposure they truly have. Does that happen a lot?
Every day. I look at the current holdings and what the risk score is on that based off different risk software we use, and oftentimes they're much more aggressive than they actually knew. So that's the first part of the conversation. Hey, are you comfortable with this? And then something we always ask them, in 2022, did you lose money? And we can see it on the portfolio. They might have lost 18, 20%. I'm like, have you done anything different? No, I haven't. Okay, do you think you still want to be in that kind of portfolio, knowing that you are now retired and you don't have as long to make that money back and you're no longer contributing? And the answer is usually like, no, I wasn't aware of that risk, and that's not something I'm comfortable with. So that's a great question, and that's something we have to address daily with clients.
I mean, that's an interesting tactic. I like that. So when people do come in for maybe a second opinion on the portfolio they currently have, and they tell you, look, I don't want to take a lot of risk. That's why my portfolio is so conservative. But then, Travis, you take a look with your financial advisor lens and you see that they don't realize how much exposure they truly have. Does that happen a lot?
I think you do at times need to ignore all the noise and just make sure that your portfolio and your financial plan matches how you truly feel about risk. And every single day there's going to be a new headline, right, popping up. If you were to make a change on your portfolio every single day, you're going to very quickly become a day trader. So you need to make sure you have a long-term plan. We have a long-term vision. There's different types of portfolios for different needs, right? If we need this in 1 to 3 years, and that's kind of a short-term need, then we need to be more conservative, keep the money safe, and be liquid. If it's more of a mid, let's say 4 to 6 years, okay, maybe we can have a little more moderate approach. And if you don't need to touch the money for 7 to 10 years, and it's really set for growth for, let's say, your children or just a big rainy rainy day fund, well, maybe that can be a little more aggressive. But I say the word aggressive with a grain of salt, because most of my clients, like I said earlier, are getting ready to retire or already retired. So that word aggressive, we don't often use any aggressive portfolios. I mean, it does happen, but generally speaking, that's something we're not doing a lot of.
Yeah, it's very specific to each individual. So if you want some help balancing and working with your retirement portfolio to get you into a plan that you're comfortable with, the team at Ivanoff Advisors and Ivanoff Wealth Management, they can be a resource for you. Reach out for a complimentary Ivanoff Retirement Roadmap. It's no pressure, no obligation, just a chance for you to meet with the team and see how things could work out for you. Get more information online at ivanoffinsights.com. And as always, thank you so much for listening. You know the headlines probably won't stop, so we will be here breaking things down, how it could affect you, and helping you sort out the retirement puzzle. Just make sure to hit subscribe on Ivanoff Retirement Insights so you never miss an episode.
Investment advisory services offered through Ivanoff Wealth Management, a registered investment advisor firm. Registration is not an endorsement by security regulators. By contacting us, you may be provided with information about insurance products, including annuities offered through Travis Ivanoff, California CRD number 325275. The firms are separate entities. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company and are not offered by Ivanoff Wealth Management Incorporated. Read your contract for restrictions, limitations, or penalties. Ivanoff Wealth Management is not licensed in all 50 states. To find out if Ivanoff Wealth Management is licensed in your state, please call 714-553-1490. Ivanoff Advisors is not affiliated with Ivanoff Wealth Management Incorporated. Advisory services are offered by Travis Ivanoff through Ivanoff Wealth Management. Insurance services are offered by Paul Ivanoff through Ivanoff Advisors. The aforementioned are unaffiliated companies.